Over the holidays, a massive $82 million wall of leverage got built up in the Bitcoin market. Today, we are going to show you exactly how it all came crashing down.
So, take a look at this heat map from December 23rd. See this massive bright yellow band? Well, that represents over $82 million in leveraged longs. It was a giant wall of money, all betting that the price could only go one way, up.
This kind of concentrated leverage makes a market incredibly fragile. What it means is that even a small dip in price, well, it has the potential to trigger a catastrophic chain reaction.
And that chain reaction, it's called a liquidation cascade. The easiest way to think about it is like a series of dominoes. A price drop forces sales, which pushes the price down even more, forcing even more sales in this brutal downward spiral.
So we are going to walk you through step by step exactly how that entire $82 million structure was completely wiped off the map in less than 8 hours. And probably more importantly, we're going to look at what this whole purge means for the price right now.
All right, so to really understand the crash, we first need to analyze the setup. The incredibly unstable market structure that existed just moments before this whole cascade kicked off. Okay, this heat map from the 23rd, it shows that huge yellow band solidifying right around $89,000. Every single one of those bright lines you see represents millions in liquidation orders from traders who are all betting in the exact same direction. And this created the perfect storm. We had a really high concentration of longs, price was stuck in a tight range, and you had low holiday volume, which meant there are way fewer buyers around to absorb any selling pressure. You combine that with a general sense of, market complacency, and it was just a recipe for disaster.
Now let's get to the main event. We're actually going to watch this cascade unfold step by step using the real heat map data. If you find this kind of real-time analysis valuable, go ahead and drop a like and share.
So fast forward to 4 a.m. on December 26th. The price is kind of just moving sideways, but I want you to notice the thick liquidation bands just below. In trading, these aren't just support levels, they're magnets, really, because the market often gravitates to where the most liquidity and the most pain can be found.
And there it is. Just 4 hours later, at 8 a.m., the cascade ignites. Look at the price line. It just slices straight down. As it hits those first liquidation levels, you can actually see them vanish from the heat map. Those are the first positions being forced sold. By 8 p.m. that same day, the whole purge is complete. I mean, the heat map just brilliantly illustrates the aftermath. The entire dense structure of yellow bands we saw earlier, gone, replaced by this empty, purple space. This is a perfect example of why this kind of data is so critical for traders to spot and manage risk. For more insights like this, make sure you're subscribed to the YouTube channel. Just like that. Tens of millions of dollars in leverage positions completely erased from the market in a single day.
So what happens after a violent reset like this? Let's analyze the new market structure by comparing the before and after.
The contrast here is just stark. On the left, you see the market from December 23rd, absolutely loaded with rocket fuel. Then on the right, you see the market on the 29th. It's been totally cleared out. The risk of that specific cascade happening again is now basically zero.
And the numbers, they totally confirm what the heat maps are showing us. Over this period, the price only dropped about 2%, but it wiped $40 billion from the market cap. That's a relatively small price move that had a massive, outsized impact on all those leveraged traders. So the key takeaway here is pretty simple. The market has been reset. The immediate danger of that specific long squeeze has passed, and that creates a much cleaner slate for the next price move. But, the market never sleeps. So let's look at the new data and see where the next price magnets are starting to form. Where is leverage rebuilding right now? Follow us on Twitter for more of these updates as they happen.
Okay, so looking at the latest heat map from the 29th, you can see new leverage is already clustering. And I want you to notice these bright yellow bands forming. But this time, they're above the current price, right around $91,000. The peak amount of this new leverage is already back up to over $57 million. This just shows us that traders are not sitting on the sidelines. They are aggressively rebuilding their positions, just this time in the opposite direction.
And this, well, it leads to the age-old question, right? The market has this uncanny way of finding and exploiting these exact patterns of behavior. But have traders actually learned their lesson from the holiday cascade?
This leaves us with a final billion-dollar question. With all this fresh leverage now stacked above 90,000, is the market priming for a really powerful short squeeze to the upside?
Or is history just going to repeat itself with another painful rejection? Let us know what you think in the comments below. And if you found this breakdown valuable, subscribe and drop a like. We'll see you in the next one.